Hi, I'm Fred Arnold, a mortgage professional with American Family Funding, a division of American Pacific Mortgage Company. And today I want to talk about reverse mortgage with Fred Krieger. Fred Krieger is the branch manager with American Family Funding. And Steve Schaefer. Steve is let me get this right, a reverse mortgage specialist with American Family Funding Reverse Mortgage Group. Welcome to the show.
Thank you, Fred.
Thanks, Fred. Let's talk all about reverse mortgages. Fred, what is a reverse mortgage?
So basically, a reverse mortgage is someone who is 62 years age or older who lives in their house as their primary residence and owns it. It could be a single-family residence, it could be a condominium, it could be even multiple units. Now, the reverse mortgage itself allows the senior or person 62 years age or older.
Some people don't think of themselves as senior when they're 65 or 70.
Exactly. One of the great aspects about the reverse mortgage is they actually can pull money out of that house free and clear without having to pay that money back. And I think that's the biggest opportunity. The difference between people misunderstand what reverse mortgages are. It is the reverse of what we call a forward mortgage.
Steve, a lot of people are choosing reverse mortgages now.
I mean,
you're seeing it all over the TV, all over the radio. There's a lot of information out there about reverse mortgages.
Matter of fact, over the last decade, the average age of people taking reverse mortgages has gone down about 5 years. It's now down just below 73. And I expect as the boomers enter retirement, we'll see that age go down even lower. The reason that a lot of people, Fred alluded to, the mechanics and what the reverse mortgage is, but the reason a lot of people are taking a reverse mortgage is for choices and quality of lifestyle. There are a lot of different choices you can make with it. Say someone is, close to retirement, but they're still carrying a mortgage. And that's another issue, too. You don't have to own your house outright to qualify for a reverse mortgage. If you've got a $100,000 balance on a $500,000 mortgage, you could easily qualify for a reverse mortgage. Get rid of those reverse mortgage payments and move forward and look at some of the choices that you can do.
Now, Fred, let's talk about lifestyle. Because it's all about the lifestyle.
Right, and you and I have done reverse mortgages plenty of times over the last couple of years, and because it's become more prevalent. And I think, Steve kind of alluded to the fact it is about a quality of life. I talk to people all the time that on their fixed income, they can afford their monthly obligations. The problem is when surprises happen. Car needs to be repaired, roof needs to be repaired, just things, life happens. And I think through the reverse mortgages, it allows them that quality of life. And it goes back to really that quality of life. I even talk to a lot of people that, believe it or not, through financial planners who a lot of times, not just on fixed income, Social Security, pensions, but also live on dividends of interest. Well, the unfortunate part is what we lived through these last couple of years, that interest and dividends have not paid,
down.
Exactly. So what happens, a lot of times the reverse mortgages help offset those little valleys, if you will, during the markets when things aren't as well, so they could pull that money from. Now, the great part about a reverse mortgage, even when dividends come back, interest comes back, they can actually put that money back into that mortgage itself to actually lessen what we call the amount of benefit.
Yeah, pay it down. Steve, let's talk about some examples.
Yeah, that would be a clear example. I know a couple who had recently got into a reverse mortgage with a small balance remaining, paid off their mortgage balance, and took out an equity line of credit. And that is sitting at the ready in case they need it, and they're well on their way to retirement. There's many different options. I know Fred had worked with someone too, who was an older woman who wanted to gift her grandchildren.
Yeah, one of the greatest parts, even my grandfather, his greatest joy was to see his grandkids go through college. He didn't even get their first home. Right. And when I was talking to this woman, the most important thing to her is that she wanted to see the smiles on their faces. She didn't want to wait till she died and have the inheritance go to them. She wanted to live for it now. So she owned her home free and clear. So all she did was she took an equity line of credit on the reverse mortgage and gifted out to her 3 grandchildren $10,000 each so they can graduate college. I mean, talk about an incredible gift. Now, the great part about that is once they graduate, she can gift them again another $10,000 each to put down for down payment and closing costs on their first home using an FHA mortgage, which they can put as little as 3.5% down. I mean, think about how great that would be.
And the good thing is interest rates are low, so the cost of funds are low. So the money goes a lot further. And Fred, you mentioned a few things. It's all about quality of life, but not just quality of life, for example, paying off a mortgage sooner, but it's the joy of life. It's getting as much as you can out of life.
Right, and that's why it's so important. So every time we have what we call discussions with the person who wants to get the reverse mortgage, we ask who the stakeholders are. because I think that's the most important part. Okay, well, you have kids, you have grandkids, you have CPAs, et cetera. Who are you getting advice from? And we want to ensure that that person that's getting a reverse mortgage really gets as much advice as possible. And that's really important.
Yeah, good point. Steve, another example.
Another example would be, Fred had referenced the grandmother gifting children. I know there was another couple too who owns a house outright, and they've got grandchildren out closer to the beach, and they want to buy a second condo out there, and they were able to just take out their money from their primary residence, put it in, buy the condo cash, and have that as a kind of weekend getaway and for those long babysitting weekends to help out their daughter.
And what better joy to babysit the children, but be able to go by the beach where it's a little bit cooler, walk to the beach and enjoy that time. It's not one of those things you just read about in the paper. It's something that you can make happen.
It's about choices.
Yeah.
And it's a very valuable choice that people have.
A lot of people will ask Fred about the tax implications.
Right. Now, again, we're not CPAs. But we do ask that the CPA be part of this decision-making process. But really, the money that you get out of the reverse mortgage technically is non-taxable because it's the money you've already put into the house itself. So again, you want to basically look at a tax professional, ask their opinion, and what I kind of said before, make sure you bring that person into that decision-making process.
Is it safe?
Absolutely. One of the great parts about having that reverse mortgage is that it's actually protected under FHA. So it's a government sponsor. No, it's a government entity itself that has government mortgage insurance built into it. And the reason why it has that, let's just say you outlive the benefit. And we call benefit, that's the amount of money that you actually pull out of the property. So if for some reason you decide to leave the house, and let's say the amount of benefit that you received, the money that you received over the entire lifetime, is greater than what the value of that property is. Well, that would be upside down. And you want to make sure that your heirs aren't left with a bill, right? Well, that's why the built-in mortgage insurance is placed there. So literally, the estate can basically walk away, not have any tax burdens whatsoever, which is one of the important reasons why it's so safe. And before they even initialize any contracts, before they even go through the process, they must have mandatory HUD counseling. Mm-hmm. And again, I'm not part of it because I'm a party to the transaction, which means that I don't want to give them any influence. And what we've kind of talked about before, you want to bring in all the stakeholders. You want to bring in the children, you want to bring in the CPAs, the financial planners, anybody that gives you advice. It's so important to ensure that that happens before we even initialize and start the whole entire process.
And everybody makes a choice together. And I think that's really important. In a family, everybody looks at that, or professional, whoever you get your professional advice from. Steve, how can he get started?
You can reach me, Steve Schaefer, American Family Funding Reverse Mortgage Group, area code 661-284-1150, extension 208.
Fred, your extension?
My extension's 111.
Thanks again. Thanks for this great information. And again, if you have any questions at all concerning reverse mortgages, make sure you get a hold of American Family Funding. And again, the number is 661-284-1150. These guys are experts. They'll be able to explain it to you so you understand your decisions that you have. Thank you very much. Thanks for coming in.
Thanks, Fred.
Okay, thanks, Fred.
You're welcome. You're welcome.